examples as well to kind of show you guys what I mean by them. And if you have any questions, you're welcome to ask, and I will go through them. I can try to answer them as I speak. So it's more going to do with just a Q&A while I go over everything. So I'm not going to go through the market. We did that yesterday, but we'll go through more as a workshop learning about all these, okay? So good morning, good morning, good morning. Okay, so let's get started now. Okay, so I see a lot of familiar faces, so I'm sure you've seen a lot of things that I talk about here. But for anyone that's new or for anyone that needs more clarification, certainly this is why I'm doing this. Okay, so I'm gonna get started. I don't have a script here. I'm just gonna go by what I want to talk about. And then if I'm going too fast or if you're not sure, you can ask me questions and then we'll take it from there. Okay, so I want to first talk about what I mean when we talk about price action analysis, right? When we talk about price action analysis, different people have different variation of what they think price action is, and really doesn't matter because everyone trades differently, everyone analyzes the market differently, etc. And I think the most important is for me to pass on this knowledge is to identify um, the two main phrases of the market condition, right? So we talk about there can only be impulses, they can only be corrective phrase. Okay, so that's the first thing you should know, or first thing when you're analyzing the market, you should understand right away that kind of forget about what you may have learned in the past or what you may have taught in the past. There can only be two phrases in the market because that is how the market moves. Okay, it doesn't matter what time frame, doesn't matter what market you're in. There can only be two phrases. So just from the examples that I'm talking about below, um, this is an impulsive phrase because it's a period of fast momentum, fast accelerating price, and then this is a period of corrective phrase where price is consolidating, it's not moving too much, it is moving up and down, but it's in a but evenly zoom of the next impulsive phrase. So the basic understanding when we talk about impulse and correction is really when you see a strong impulsive move, and if it is followed by a usually, not always, usually we're going to get the next impulsive phrase. That is the basic understanding of market, basic understanding of the nature of the market, and basic of how the obviously it's not going to move every time like this. That's more as a textbook example. And this is why we have so many different variations of structures and patterns and etc., which I'll go over more in depth. You should have a very strong understanding of when you see a impulsive phrase and when you see a corrective phrase followed by it, you're looking for the next impulsive phrase. You often will hear me in the streams talk about that. I don't want to get in the trade when it's in the corrective phrase because the correction can go on for a while, for a longer term. You don't know when it will finish. We are trying to get in on the impulsive phrase because that's when the period of fast momentum, your trade that you enter is likely to push towards your target, right? You don't want to get stuck in the consolidation phrase, which is what many traders often do. And I find many traders when they're trading different strategies or different things, they get stuck in the consolidation phrase. Okay, so far, impulse correction, is that clear for everyone? Does that make sense? Does that make logical sense when you look at the market? We can go through a few examples first, and I'll look back on to other things I want to talk about. So, how to draw the trend line correctly? Yeah, let's give a few examples here. So I'm just using random example. This is the whole point of me doing this is to show that it doesn't matter what market you're looking at. I'm looking at crypto right now, right? But it's the same as currency, same as commodity, same with equity, indices, things like that. It doesn't matter. So when we see an impulsive move, when we understand that this is a strong impulsive move this is a strong impulsive move, right? So in a strong impulsive move, naturally we're going to follow by a correction. Okay, so how to draw the trend line, how to draw the correction. I always talk about in my streams, look for the swing highs and swing low of the price. Okay, forget about this. This is probably from spread or from whatever. So ignore that. In other broker you might not see it, but the whole point is you're looking at the few swing highs and few swing lows, right? They should be somewhat evenly parallel or evenly balanced, right? You're not going to see something like you're not going to this, for example, right? You're going to be somewhat evenly together like that. So two swing highs and two swing lows. People have variation of this. They think 3 is better or 3 is. I think 2 is the minimum of a structure. Okay, so 2 swing highs, 2 swing lows to complete or at least to categorize a structure here before impulse move. Impulse, correction, impulse. Okay, just like what I mentioned here, right? So your job as a trader is to identify this correction here, identify what it's doing, and have a plan forecast on when this correction will finish so you can look for the next impulsive move of the market. Okay, so I'm not doing market update, my friend. So I'm doing a trading workshop. I'm not gonna go through the market today. Okay, I did that yesterday. So far so good, guys. This is the pure understanding of any market movement, right? Impulse, correction, impulse. Okay, so let's look at a few other examples. I'm just pointing out the impulse correction very clearly here, just so you guys understand. So here on dollar CAD, so Forex market, like I said, different market, doesn't matter, different time frame, doesn't matter, right? This is an impulsive move. This is a correction. This is the next impulsive move. And remember, I'm talking about few swing highs, few swing lows, right? So at least 2 swing highs, 2 swing lows to categorize as a structure. And that shows you that this is an impulse, correction, impulse. Okay, and if you really zoom out here, this overall move, even though is with a correction in there, pretty much is one big impulse down. So this impulse down followed by this correction gets the next impulse. Okay, so again, look for the 2 swing highs and 2 swing lows. It's not always going to be picture perfect like what you learn in the textbook. It's never going to be like that. You notice this part of the structure here points out, and this is what I always say. Don't just because the price broke out some trend lines doesn't necessarily mean it's going to go up, which is what a lot of people tend to do. The trend lines that we point here is to hold the price, hold the correction. This is how people to identify where the correction is. But in my opinion, if you're as familiar as what I'm doing, you don't need these trend lines because I already see the structure there. Okay, I don't need the trend line necessarily, but I'm doing it to show everyone, right? But I already see that this is an impulse, this is a correction, this is an impulse, this is. Train yourself to be that point where you don't even need the trend lines anymore. The trend line is there to help you identifying the structure first, and that you can easily understand that we're still in a corrective and we'll phrase. Okay, so okay, so that is trend line, that is impulse correction. That's back to a few of different structures and different price act, different correction and different structures. So when we talk about patterns and structures, this is the more important part now. We are familiar with impulse and correction that we just went over. But the key here to price action analysis is that identifying what patterns it's in, right? When we say patterns and structure, we're really just talking about the correction itself. Okay, we're really just talking about the correction. So you often hear me say correction, structures, and patterns, they're really all the same, right? Corrective structure, corrective pattern, they're really all the same. And the most important part is to identify what patterns and structure it's doing. Okay, so I list out a bunch of here, but they're going to be the most common ones you're going to see. Okay, they're going to be the most common ones you're going to see in the market. Okay, so I'm going to go through a few, and I'm going to go through a few examples that you're likely going to see in the market anyways. So, neutral nature of expanding pattern. I made a video about that. Let's go. If you want to check out that, sometimes you go to my YouTube playlist, price action structures. The latest one video I made is regarding expanding structures somewhere. Yeah, expanding structures here. So you can look at it here if you want. So typical ones we're going to see, well, typical flag correction. I think people always talk about flag. Yep, flag correction is probably one of the more common ones you're going to see. Remember, guys, this is one way of looking at it, right? Remember, price can have a bullish flag and price can have a bearish flag. Remember that, right? So look at all these drawing right now. I'm going to inverse it and it's exactly the same, but just different way. Notice that now? This becomes a bearish flag, right? Okay, so I'm going to flip this back and forth just so you guys understand what I'm talking about. So we have bullish flag, right? And then we have ascending channels, right? These are going to be the most common ones you're going to see. So what do we expect from ascending channel? Ascending channel is a reversal correction, right? So this is the time to get into more about continuation and reversal structures. So these two really ties this in. What I mean about patterns and structures, there can only be two types. This is why you always hear me repeat pretty much every sessions. I talk about there can only be two types of correction. There can only be reversals. There cannot be any other ones. Okay, so really understand that there can only be two types of correction. Okay, so if we're looking at this example, flag continuation, or you want to call it channel, but it's a continuation correction. Whereas a ascending channel is a reversal because you have a move push up and a reverse down. Okay, so there is a big difference between the two, right? You really have to identify these two very clearly here. Okay, so few examples I'm going to go through these written example first. I'm going to go through the market after. Okay, so just patient here again. Head and shoulder pattern, right? We talk about head and shoulder pattern. Pretty much every single market has these. Again, this is a reversal structure, right? We reverse the price because we have price to couldn't push up anymore, and then the right shoulder is usually the time to enter. The right shoulder usually give us some sort of corrective structure, and then we push down from the price. Okay, let's look at for these kind of examples here in the market. These are going to be a little bit more advanced. I'll wait a little bit longer, but these four examples here, I'm going to go over. I'm going to pick some market to go over and see if they can already see. So look at dollar yen here. So what do we see from dollar yen? Well, if we zoom out here, this is an impulse correctly, right? This is a strong impulse on the market. This is a big kind of a channel or a flag correction. Okay, you can clearly tell when we put the trend line in, we're looking at the swing highs and swing lows of the price, right? So this classified as a correction here. So what we look for is, if you look closely into the correction, there is a smaller correction here, right? So we know that this is that descending channel that we talk about. It's reverse of ascending channel that I just went over, right? You just have to inverse it. Remember, we talk about ascending channels, reversal, and it's the same, descending channel, reversal. Okay, so within this descending channel, if you can tell, there is a head and shoulder pattern here. If we look closely here, this is a inverse head and shoulder, right? This is a, if you look closely here, inverse head and shoulder pattern, which is a reversal. Again, the example head and shoulder pattern. Okay, very straightforward. So you're going to notice that you're going to see structures and patterns and structures everywhere, right? In different time frame and all of them together, okay? And here, let me flip it back here. And here, what we have here is a expanding type of structure, right? We have an impulse out, expanding structure, and then impulse again. The really key here, in my opinion, to identify these is to understand that when a structure is forming like this descending channel, we know that the descending channel is a reverse, so we're looking at impulsive move, right? This is exactly how when I do these forecasts, this is what I always talk about, right? We see a potential inverse head and shoulder, we see a descending channel, and we know that we're in the higher flag or channel bullish move. So we know all that it's in our favor to potentially have this bullish push up, right? This is what we do forecasting for. So we prepare for a potential move like this. So let's look at a few more examples. Yeah, let's just look at Binance. So Binance coin, same idea here, right? So this is one of them that I talk about, right? Correction after breakout. So how to confirm the correction is not false? Well, when a correction finishes, when a larger correction finishes, when the next impulsive move happens, there's always going to be small lower time frame continuation corrections. And the first one that you see, the first one that you buy entry, and that in the market. Okay. Makes sense so far? Any question on this? So correction after breakout or the phrase to push up, we wait for that lower time frame continuation, and then we look for the next impulsive move. This is pretty much, again, this is why we forecast it, right? Impulse, correction, for the next impulse, right? So good morning, good morning. Nice to see you guys. Nice to see a lot of new faces and familiar faces. Good. Okay. Sorry, there's some YouTube. Yeah, I had some trouble on YouTube. It's fine now. YouTube is fine now, by the way. So if you want to watch it on YouTube, it's fine. So let's continue. Let's go back to my example of. Oops. Oh, where's my drawing? Oh, I see one. Sorry. So let's talk about a few more examples. Let's talk about a few more advanced kind of patterns and structures and continuations. Something like this, right? If you guys always hear me talk about a M style pattern, this is exactly it. So M style pattern or W style pattern is just, again, inverse, right? So you can see that there is an N style pattern here. What an M style pattern does is usually we're going to have a double top, and then the right top is going to be somewhat corrective, moving in price up, and then this is a big reversal corrections. Okay, again, if you inverse it, this becomes a W pattern, right? Same idea, right? Again, this video I talk about in my price action videos. You can watch that here. Detailed look into M and W straw pattern. So look at this if you want more in depth. But this is something that I always notice in the market. And the prime example we have right now is probably pound yen. So if we look at pound yen here, this is probably the best prime example of that M style pattern. We have a M style pattern here. Okay, so what do we look at M style pattern? Well, double top first of all, so double top here. Usually when the right side of the M is going to be corrective, and we're going to see strong impulsive move, right? So making this a large, okay, and this is what I've been talking about, right? M style pattern, double top, looking for a reversal correction, reversal impulse down, which is pretty much exactly what's happening here, okay? Really, and if you notice here, this part here, this is originally when we first pound yen, if you guys recall, maybe a couple weeks ago. This is the original pound yen move, right? And if you look closely here, there's also, notice, right? This is exactly M style pattern, a smaller version of the bigger one that we're in right now. But this is an impulse, this is correction, this is impulse correction. All I'm saying is this is a M style pattern here that's in the make, and this last bit of the corrective phrase to the double top here leads into this impulse here. Okay, so you can see it doesn't matter what time frame you're in, or it doesn't matter what market you're in, you're going to see these type of structures very often. Okay, and the bigger the correction, the structure is, the stronger that next impulse move will happen, which is what we're experiencing right now. If you notice, right, the M style pattern, you notice how the corrective phrase is always going to be long and deep, but when the impulsive move happens, it's going to be sharp and fast. Okay, so morning, nice to see you guys. So don't use indicators. I personally don't, and this is probably another lesson for another day, but I don't use indicators. I'm not here to say they don't work or anything. I hear people often say that. I think they work as long as you have a good strategy and plan to use them. But what ends up happening here, the problem here, in my opinion, when you're trading price action this way, when we talk about impulse correction, when we talk about structures, when you have like support resistance somewhere in the middle, when you use typical indicators like EMA lines or MA lines or whatever, right? What ends up happening is you're never going to catch the impulsive move because you're always trading through some sort of support resistance or some sort of EMA, MA lines. Would you agree? If I plug in some lines right now, if I plug in some lines, right? People usually use EMA lines, right? Or MA line, doesn't matter. People also, it really doesn't matter. Usually people use 50 based on my understanding. So if you use a 50 EMA lines, happens, right? When you have EMA lines like this, I'm sure typically people are not going to trade through EMA lines, right? That's the strategies, right? The EMA lines or MA line is there to act as a support, act as resistance, whatever. And I don't ever really hear people say, okay, I'm gonna use the EMA line, I'm gonna trade through the EMA line. Usually people don't trade through the EMA line. Correct me if I'm wrong, but that's usually what I hear. And support, same idea. Resistance line, people don't trade through the support resistance line. I mean, that would be also a good statement. So when you have support resistance going like this, when you have EMA line going like this, you notice you're never going to capture the impulsive move because trading through them. So it becomes a conflict of interest now because when do you trade through them or when do you not? Like when do you make a statement that, okay, well, this time I'm going to trade through my EMA and support resistance, and the next time I won't, right? So how do you determine that, right? You see what I mean? Because the EMA lines and MA line, you can see it works when the market is trending, right? It kind of acts as a support or whatever resistance, whatever you want to call. But when the market is ready for that impulsive move, it's always going to just trade through them directly, right? So you really can't have both of them really on the same because it creates conflicts. That's really what my understanding of it. Okay, so um, Amir, we can enter in the market on candlestick pattern after breakout chart pattern structure or aggressive entry directly enter in the market. Um, is the example I use when, let's say pound yen as example. Um, so when pound yen had this sharp move breakout, right? If you're looking at candlestick pattern, I'm assuming you're talking about like bearish candles or whatever. But I personally is waiting for the first impulse, right? This is a correction. So we have ascending channel correction, first impulse down. I was looking for the first continuation correction. Remember, a correction can come in all shape and all size, right? I was only looking for a lower time frame correction, which is kind of this kind of a flag or channel. And I set in an entry order, stop loss above the high, and price tag me in and go on. I think what you meant is you can pair with candlestick, sure, because usually candlestick will be corresponding with the impulsive move, right? So when the move is going to happen, when the correction is forming, you're going to get some sort of bearish candle to give you that extra bias. I would say candlestick formation is a good added confluence, but it's not a must. Okay. Hussein, what is the best time frame or when the trade is going to impulse after correction? So don't think of it as specific time frame. Think of it as only higher time frame and lower time frame. So higher time frame is anything higher than daily, weekly, or monthly, and lower time frame is anything under 4 hour, 2 hour, 1 hour, 30 minutes, 15 minutes, etc. So the whole point is to identifying what the higher time frame is doing. We see this higher time frame structure. We see the M style pattern in the making. We see this ascending channel. So we're already prepare ourselves for a potential reversal impulse. Okay, and the point now is after you see that first initial impulse, you're going down to the lower time frame. You're going down to any of these time frame to look for a possible entry. So a possible entry, this is a possible entry, this is a possible entry as well, okay, and this is a possible entry, right? They're all continuation corrections, if you notice, okay, to this, but you're always going to see lower time frame corrections. Doesn't matter where you look at them, right? You're always going to see lower time frame corrections, okay? Is it possible to trade both the impulse and corrective phrases? Of course, you can trade whatever you like if you want to trade in the impulsive phrase, but I'm giving you the best is to not enter a trade when it's in the corrective phrase, because the corrective phrase is, this is the hardest part about price action, is we don't know by 100% when a correct. So this is why a lot of new traders lose money in trading, is that they probably see the same thing as what I'm seeing. Okay, pound yen for a sell. And over here in this area, they're going to short it, short it, short it. The correction isn't finished. They're just getting tagged out, tagged out, tagged out, tagged out. They lose a bunch of trade here only to see the impulse move happen without them. Okay, and this is why the biggest thing that new traders fail is because they're impatient, right? They want to short this, but they're not waiting for a confirmation. They see something happening here, they see a corrective fashion, but it's not finished correcting. What if this continue to correct up like this? That's possible before the next down move. That's also possible, right? So you entering in the corrective phrase is kind of just giving money back to the market because you don't know when this will finish. Okay, so think about that, right? When a correction is correcting, we don't know when it will finish. Okay, that's why we wait for confirmation, right? Wait for the breakout, wait for a lower time frame continuation, and wait for the price to tag you in. Instead of trying to hope and call this is the top, this is where a lot of traders lose money. Okay. That when I'm watching you on the charts explaining things, it makes so much sense. But when I look at the charts myself, I can't just see anything. My mind goes blank. Any tips? Um, well, the most what you really need to do is really backtest everything you see, right? I made several videos on backtesting. Make sure you watch that. I don't know where it is. Backtesting. Sorry, I'm just trying to find it so you can watch it. I think it's intro here. Here, why I backtest. There's a few backtest videos I have. The whole point of you backtesting so that it doesn't go blank. The whole point we backtest, think about it as doing homework. When you're ready for exam, you do homework, right? You keep reading through the textbook, you're doing examples, you're doing the homework, so you get familiar with it. There's really no quick way around it. I'm gonna be very honest with everyone. A lot of people think they can just buy someone's course or get someone to teach them and they're fully ready to trade. No, you really just need to spend the time and effort to backtest the market, right? You understand how to backtest. I made several videos on this, so watch them if you're not sure how to backtest, right? You see this move already happen, right? You see this move already happen dropping down, and this is why we backtest it so that we go back to our previous before the move happened, and all we're trying to do is to look for any possible entries because we already know the move happens. All we're here to do now is we're trying to find clues, we're trying to find lower time frame corrections so that it gives us an opportunity to enter the next time we see something similar like this. Okay. How many times flag correction? That doesn't kind of make sense. If you're looking for a flag correction, it's like I said, it's always going to be at least 2 swing highs and 2 swing low. 3 or 4 better, but all you really need is 2. Sean says corrective phrases are a account killer. I can tell you, yeah, absolutely. You just understand a lot of people are losing money, okay? But when the price isn't in the corrective phrase, price pushes up. So this is an example here on Euro Kiwi. This is a corrective phrase, and this is the next impulsive move, right? It's very straightforward when you look at it this way. So account killer, yeah, I agree, because what happens here if people are in this here because there's a few lower time frame correction that made me think this can be the next impulse, but it doesn't happen. That's why we take break-even trades, we move stop loss to break even. But you can tell when the correction finishes, always impulsive move happens, and it's going to be happening very, very fast, very, very strong. There's not likely to be any entering here, right? The only entry that I saw on this move here is really this is the only saw. So if you look at this is an impulse, this is a correction. We have a lower time frame impulse, lower time frame continuation, and then the strong impulsive move happens, and then another phrase of another corrective phrase, and then another impulse happens. Okay, so that is how you're going to work on your charts, how you to work on your ability to analyze the market. Okay, you see that this is a larger descending channel that we go over. Right, descending channel are reversals, right? You can tell this is a reversal correction. So at the end of this reversal correction, we have a bullish impulse, bullish correction, bullish impulse, bullish correction, and we're pretty much looking for the next bullish impulse. Okay. Coinbase link. I do trade crypto. I use Coinbase, Binance, and Kraken for crypto brokers. How can you tell they're bullish correction? Well, you have to really work on identifying them, right? This is why I'm showing you guys the bullish correction so you get familiar with them, right? There's only going to be a handful of these, okay? So I went back to my chart here. You can tell if they're bullish because first of all, you need to see a bullish impulse, right? First of all, you need to identify there's a bullish impulse there and there's a correction in the making. So there's always going to be somewhat slanted in a way, like this, or sometimes there can be parallel, but most of the time they're going to be a little bit more slanted like this, and that's going to be a continuation. Okay, so that's one way of looking at some sort of continuation correction, or you can see it as an expanding correction, so an impulse down, continuation, and then go down. Pattern, I'm going to talk about this reversal impulse now, which is probably the main one you should also be aware of. I talk about this in Kiwi Dollar. If you guys have news events, I think this is a prime example of it. Over here. Okay, so how do you tell they're bullish correction? Well, here's an example. Pay attention here is first the ascending channel, right? We know that this is a ascending channel. This is a reversal correction. If you notice, this is a strong impulse up, and after when I remember, I always say after impulse. Now, actually, there's correction. Is there a correction here? Nope. Is there a reversal correction like an ascending channel, right? This is an impulse up. This is an ascending channel in reverse. Was there ascending reversal correction here? Nope. So what does this tell you? That a strong bullish impulse up is not followed by any correction. It's followed by a reversal impulse. That means that the momentum up is quickly diminished by a reversal impulse. And if the reversal impulse is followed by a continuation correction, this next impulse is very, very high probable to happen. Right? So a few examples here on same pair, same Kiwi dollar. Impulse up, reversal impulse down, continuation correction, impulse. So if you look closely here, this becomes a one large impulse. This is a flag continuation correction, and the next impulse down. And look at where we are now. This is a correction in the making. This is an impulse. So expect this to be a correction to go. And if you look closely here, I made a video about news event. This is prime example of why news doesn't predict the price action. So this is when FOMC meeting, right? When it happens, we have a strong surge to the upside. But what ends up happening is a bullish push up is kind of followed by a reversal correction. We push down here, followed by a expanding structure continuation, and we see the next impulse. So impulse, correction, impulse. But this impulse only happened because we have a bullish impulse and a reversal correction, impulse down, correction, impulse down again. Okay? Good, good, makes sense. Okay. The break of trend line is a sign of impulsive start. No, this is what you need to pay attention to is breaking the trend line doesn't mean anything. Breaking the trend line is a first sign of a potential impulse, but we always confirm it by a lower time frame continuation. You hear me talk about every single time is that breaking the trend line means absolutely nothing. The trend line can be all subjective. So this breaking the trend line, but if it's not followed by a continuation, this can just reverse back up and start correcting again. And naturally, nothing is wrong. This is still a flag correction. Okay, this is sometimes what I call market tricks people or market tricks impatient people. Okay, because what ends up happening is you see a breakout. This is what people trade those breakout strategies. It doesn't really work because they break out, but if there's no confirmation here, they're just entering here without the confirmation, and then price just push down again, and then continue correct itself a little bit longer before the next up move. Handle this consolidation because you enter the trade already, the trade is correcting, and they're seeing profit come, profit go, profit come, profit go, and they eventually can't handle anymore. Trade just this happens pretty much all the time to new traders. Okay. What is the most common pattern that happens a lot? Exactly what I've been showing. You've been seeing from my chart here. you're going to see these ones the most. Channel correction is always going to be the most. So impulse, correction, impulse, right? You're going to see this pretty much anywhere, any time frame, any market. All of them actually. So, and ascending channel is it forms a reversal correction to push down. Usually we're going to get these expanding or pendant kind of structure. They're a little bit more advanced because they can both be continuation or they can be reversals. Okay, so they're a little bit more expensive. Again, you watch my video on expanding structures here so you can learn more. Okay, and head and shoulder pattern is going to be one of the most common, right? You're going to hear this over and over again. But how you use head and shoulder, how to effectively use head and shoulder, make sure you watch another video of mine. I go over these very in detail in these videos, right? How I trade head and shoulder pattern. So watch those if you're not familiar with them. Okay. M cell pattern, double top, right? Made a video on that as well. Reversal impulse as well. So all these are going to be the most common ones you're going to see in the market. You can find them anywhere, any market, any time frames, anywhere. Okay, so let's move on a little bit. Okay, any question on these so far? Because I have other topics I do want to go over. When exit my trade, how to know this trade reversal? I'm not sure what you mean, but obviously, if you're exiting a trade, you need to look at a lower time frame. Is the lower time frame still showing you bullish move? Remember my Binance example I talk about? I talk about Binance, and I talk about that if, remember I set an alert somewhere here, I mentioned, well, if this bearish move is happened by a lower time frame continuation to push down, then I will sell the trade because that looks like a hand and shoulder to me to push down. But that didn't happen, right? Notice that we pushed down, but pretty much had a push up followed by a correction, and we're pushing up higher now. So I don't need to exit the trade. But remember yesterday when I did the market update, when this move pushed down, I mentioned if it formed a lower time frame bearish continuation correction, then I will sell my trade. That's gonna be my management. But if that doesn't happen, then obviously I'm gonna hold the trade, and now I'm running about 5% now, right? So, okay, so that's the difference of it, all right? So you just have to, especially this is at all-time high. This Binance coin is at all-time high, right? So there's no previous high to kind of look at as a double top potentially. So we're just pushing up now, and if we just break above this high here and continue, then we're just going to continue to take off, in my opinion. So, okay, so that hopefully answered the exit part. A fake breakout, yeah. What is the best time to enter a trade? Like I said, this is the best time, or at least the ones that I usually enter is I wait for a correction finish. Remember, we talk about impulse, correction, impulse, meaning that I don't want to trap in the consolidation phase. I want to make sure this correction is complete. Well, what do we look for when it's complete? Well, first, it has to be impulse out of this correction, which is the first sign. Second sign is there has to be a lower time frame continuation. And that's how I enter this trade. I just look for a lower time frame continuation, opt in with the entry order, stop loss below the low, and then price take me in and continue push up. Okay. For divergence, do we need to be precise about them? I personally don't use, I know what you're talking about, MACD, right? I don't really look at them. What I find people do sometimes, I'm not saying everyone do that, but they rely on these indicators too much, in my opinion. They're like, okay, well, this line crosses here, it should be going down. This line crosses here, or maybe you're using divergence, looking at double top or high, whatever. Everyone uses it differently, but I just trying to be as clear as I possibly can. I don't want to use any indicators because sometimes you rely on them too much. Okay, you're relying on them, but you're not even looking at the chart anymore. Rise from the price action. When you agree, all the indicators here that you're using, whether it's MACD, MA, EMA line, RSI, whatever people use, it all comes from price itself, trending or it's moving. And sometimes it doesn't catch up Okay, so it's a little bit slow. Remember, it has to be calculated towards the price, right? Sometimes that's why you'll notice the EMA line never, the market doesn't move, it doesn't catch up to it because it's too impulsive. Okay, there's like people who trade strategies, um, with break and retest, whatever. They're nice to break the EMA line and then retest the EMA line so they can enter. But when the price is really in a strong impulsive move, the EMA line, they don't catch up. They probably want to enter here or they want to enter here. The EMA line is just not close to where they want to enter because the market is in the impulsive move. That's why they can't enter these trades because the price doesn't pull back to where their EMA line is. Okay. That's a good question, Sean. Do you ever enter market entries if you see a breakout that you have not set a stop entry order on the chart? Usually not. I'm gonna say very, very little when I do that because I'm always on the chart. I'm pretty much not likely to miss these especially when I be forecasting it for a long time, right? This is why everybody needs to put in the time and chart, the time and effort so that you forecast this move, right? This is why we do these analysis. I make this post before the move happened. I'm not here to show it. More likely, what I'm saying is you prepare yourself that okay, well, this is an impulsive move. This looks like a correction that's about to finish. So I'm gonna get ready if this breaks out. I'm gonna get ready if there's a correction. So all this is already prep. I'm already preparing myself for this next impulsive move. So all I need to do now is wait for the breakout, set an entry order, and then watch it go, right? So a lot of work to put in, but I don't recommend setting market order. The reason why I said don't take market order is because it's too simple, it's too easy. A lot of new traders tend to always take market order, right? Myself included in the beginning of my trading journey. I think we all do. I'm sure a lot of you guys do that. It's just that when you take a lot of market orders and when you're trying to trade this kind of way, you'll just end up taking market order anywhere you want. And when you do that, then you're making emotional decisions. You're not even following your trading plan. You're not following your risk management anymore. You're just kind of taking whatever you see that's fit. And that's a lot of these decisions. It's no longer technical. It's emotional. Okay. Just wanted to say thank you. Your stream on YouTube looks awesome. So glad to find some non-clickbait educational material. Yeah, I mean, I appreciate that. I don't try to do clickbait. I mean, I'll make thumbnails, right? I'll be honest. We all want a little bit more viewers, so I'll make thumbnails. But I don't try to do clickbait. Whatever I talk about, I will talk about in the videos, right? Um, so let's move on. Let's move on to other things. Okay, I have more things to talk about. So thanks you guys for being here. So I do have more things I want to talk about, more content. So that's getting to a couple other things. Okay, this is going to tie into this, but I want to talk about this area here. Remember, I always talk about a correction. We're not 100% sure when a correction. We're not because we really don't know, right? And I'm not lying to you because we are not 100% sure when a correction will finish. If you think about it, that's a really because when a correction will finish, do you think I will still trade like 1% or keep a very good risk management? No, right? Because if I'm 100% sure this correction will finish and the next impulsive move will happen, then why am I even 1% sell my house and then bet all in on this one? Right? Kind of a joke, but if you think about it, that's why. Because if everybody's 100% sure on their strategy playing out, then why are we even trading 1%? I go trade my 100% on one trade, or my account in one trade, right? So we know that's not likely to happen. We know that's not this, right? People out there claiming their strategy is, high strike rate, high percentage. You gotta be careful of that, right? Because Ask them the question next time is, well, if it's so good, why don't you put all your money in there? If it's 95, 100% strike rate, which is what people write on their social media, when they're trying to sell you their strategies or whatever, ask next time. Good. Why don't you put in more money? Why are you even trading 1%, or why are you not trading? Why don't you put all your money in one basket, right, and trade that? Okay, so. Okay, so this is a prime example of we don't know when a correction will finish. If you look at this part here, well, I mentioned 2 swing highs and 2 swing lows to categorize as a structure. So we naturally think this can break out followed by continuation. But sometimes that doesn't happen, right? Sometimes the price move up to here and then move down once more before the up move. Okay, so this is why we wait for confirmation. There's a question earlier about, well, do we just enter if we break the trend line? No, because we enter when we see a confirmation continuation correction, right? So this is a good example here, is that even if this breaks out a little or break out a lot, but if there's no confirmation correction, we don't enter because this can just fall right back into it. And all we see is just a bigger structure expanding, and this bottom here is still going to be the one that takes off. Okay, so always remember that the correction, we know we should get familiar and very good understanding of all these correctional phrases, correctional structures, but they're not 100% always going to work out, right? This is all probability, right? There's no, just because you see a flag pattern here doesn't mean it's going to 100% take off. Okay, remember that. Okay. We have good understanding of likely to see the next impulsive move, but it doesn't guarantee it. So everything we trade, everything we see is not 100% guaranteed, right? So this is why we keep our risks at below. This is why we either hold the trade at 1% or we wait for a confirmation before we enter, etc. So we don't get trapped, so to speak, in the market. Okay, so remember that any correction you see, even though on paper or on the chart it looks nice, it looks clean, there's still a tendency of them not working out. Okay. Let me answer some questions here. When you set your trades up, then the algos can see your trades. Sure, but I'm not really worried about anything like that. I'm just trading my own account, so I set my entry order. I've never anything problem with that. I've never experienced what people call stop loss hunting. I also made a video about stop loss hunting. I do want you guys to take a look at that as well if you guys have a chance. Because I don't really believe there's stop loss hunting, but everyone sees it differently. But I don't know where this introduction yet. Stop loss hunting. Yeah, this is stop loss hunting. I don't believe there's stop loss hunting. I don't really see it that way, but you can watch this video and see if that makes sense to you how I describe it. So, should we not be concerned about trading bots from broker manipulating the market, for example, stop loss? That's kind of what I meant. I don't believe there is stop loss hunting. I don't see it that way. I see it more as the market itself is trapping a lot of impatient people. So someone who trades support resistance, right? The market is bouncing up like this, and the moment it breaks above, they think, well, the resistance is broken. I'm gonna go buy now, just to see the market drop. Because what do we see here? Well, we see a correction here. We see a false breakout, reversal impulse, and then continuation. But people will call this manipulation. People will call this broker stop outs, or people will call this anything they want. But most importantly is people will not admit that they enter a trade without confirmation. This is where a lot of traders lose money on, and this is also where a lot of traders blame the market or blame the brokers. Okay, so I'm not saying you shouldn't watch out for whatever. All I'm saying here is, if you want to trade as a profession, if you really profitable trader, so instead of complaining about something like this that happens, find a way that you can adjust and make money off. Okay, so this happens. So what? You can control that. You cannot control that. No one can control something like this. So why not find a way to take advantage of it, and instead of kind of complaining about, oh, that's the market manipulation, that's the broker manipulation. No, if that's all we can do is adjust our trading plan, adjust our risk management, adjust our entry, adjust our stop loss, adjust our take profit. That is something we can control. Something we can don't bother thinking about it too much. Can I ask Jojo 3-touch more confirmation example? I mentioned this. I don't think you hear me. I mentioned I'm looking for at least 2 to classify as a structure. 3 is better, but it's not necessary. 4, 5, 6, 7, 8 doesn't matter. All I'm telling you is the basic understanding of a structure is it needs 2. Okay, 1, 2. But 3 better, 4 better, 5 better, right? But it all depends on what the market will do. You don't necessarily have to wait for 3-touch. Okay, maybe different people trade it that way, but you don't necessarily have to, right? All the example I'm showing you, sometimes there's only 2, because 2 is all we need to have a completion of a correction. Okay? How much you need to lose before you quit? I mean, that is personal things, right? I mean, I don't know how much you earn or which country you're at, which currency you use. I mean, somebody could lose $1,000 US and quit. Somebody can lose 50,000 and keep going, right? There's no right and wrong in that, right? But what you need to understand is losing is part of a learning curve. People who tell you they never take losses or never lose in trading, it's all really lies, right? I personally lost money. I personally blew account in the beginning of my trading career. Everybody does, right? So anybody telling you they don't, it's really not telling you the truth, because that's not for someone to get consistent and sustainable after all these years, they have to take losses, they have to lose money, they have to likely blow a count or two in the beginning to learn from their mistakes so that they don't do the same again. Okay, so do you advise to trade as scalping? I really don't advise scalping, especially if you're new or if you're a beginning trader, because scalping is way too emotional and a lot of emotional decisions where regular people's mind, like beginner traders, newcomers, you're not likely to have the right mindset. And what it ends up happening, you're just going to take so many multiple trades, and that accelerates the account being blown, because people who actually scale professionally, they obviously have a good strategy, a good plan, and good way to execute, a good way to take profit. For beginner traders, they probably have none of that. Okay, so you gotta watch out for people who teaches you scalping. I'm not saying scalping doesn't work, but it's not gonna work for newcomers or beginner traders who really doesn't have the right mindset, trading psychology to handle something like this. This is a lot harder, right? Here's a good question. What if price breaks the corrective pattern in an impulsive manner and does not form a continuation correction? How do you enter the trade? Well, I'm going to tell you 2 different ways of looking at it. So in my, again, this is something you can watch in my entry videos. You can watch this later. 3 entries in the impulsive phrase of price action analysis. You can watch this so you understand what I mean here. There's always going to be 3 types of entries that I always talk about. And sometimes they can appear all in one, or sometimes they may not. So let's say this is a corrective phrase. We all agree, right? This is an impulse, this is a correction, this is the next impulse. So if the price breaks a corrective pulse in the impulsive manner, well, you only can pretty much put in a breakout entry, which is something like this. But you can see the breakout entry doesn't necessarily be the best because you have a very wide stop loss. You're not likely to capture the move or as profitable as something as a reversal order, which is what I would put something like this. For a reversal order, or you would enter something like this, which is a correction after breakout. So watch that video if you want to learn more about what I mean here. But I always talk about a 3 entries that you can use. A breakout entry like this, a reversal entry, or a, so watch that video if you're interested. That will show you how to do all these entries. Scalping, sorry, I missed this question. What's your, I think what you meant is to scalp scale in trades. I think that's kind of what you meant. Like if I was to enter here, and then to enter another trade, yeah, I think entering another trade impulsive move is great, which is what I suggest. Again, I have done a video on this if you're interested. I think this is a risk management one. Yeah, how to scale in the impulsive phase of the market condition. You can watch this. Basically, what I'm saying is I would only do that if I understand there is a next impulsive move, right? Remember, when the market, what's the point of entering multiple trades? That's just putting your account at risk when the market isn't going anywhere. We want to scale in the trade. We want to stack in the trades when the price is impulsive, right? So it's like, for example, I enter here. If this is pushes up above this high and then more correction, yeah, I think a scaling entry is good for a second buy. Only if my first entry is already a 1-to-1 or stop loss at break even, etc. That is my way of trading because I want to protect my capital. Right? Different people scale in trades differently. People take multiple trades. Again, I don't recommend people taking multiple trades like this. Um, sure, it will work out if it's in an impulsive move and if the market goes in your favor. But what if the market goes against you? That means you just take 5 losses in one row on the same pair, right? I don't recommend that, right? All I'm talking about is if I'm going to scale in, I want to make sure my first entry is at least break even, if not 1-to-1 profit. So my second trade that I enter, the scale in trade, even if this trade went to a loss, well, my first trade is at 1. So that's the worst possible scenario, right? And the best possible scenario is that my scaling entry works, it pushes to the upside, I earn this profit, and my first trade, I earn all this profit. So this plus, okay? So that's what I say about stack or scaling. I think that's what you meant. So analyze NASDAQ the same way as currency since NASDAQ is 90% bullish. I trade every single market, every single thing's exactly the same. There's no difference. If you're thinking indices are always moving up, but you gotta look at it when it doesn't, right? Is this ascending channel here? Is this not a reversal? A ascending channel here? And is this not an impulsive move down? I'll go through a few more indices just to show you. This is S&P 500, right? Is not an impulsive, no? And is this not an impulsive move, right? When you really see them happening, you're able to see them, right? So ascending channel, impulsive move. What do we see here? Well, we're moving here, but to me, this is more corrective. Okay, this is what I'm seeing here. It's more corrective. It's not the same as impulsive, what we see. If you notice, when they're impulsive, they're going to be impulsive, right? This is impulsive move. Whereas this is more as a sideways moving. So this leads to me believe this can lead into ascending channel. And because of the overall price that we're still in this larger ascending channel, we can still expect this move to push down. So yes, doesn't matter what market, same idea as indices, right? They're going to look the same, okay? Demo, you will lose less. Robert, I didn't, and I lose half of my retirement. Yeah, I mean, some people can start with real money, some people start with demo accounts. But by starting with real money, you probably learn it quicker because you experience the actual money that's lost, you experience money losing, and you may learn or pick up these trading psychology aspect a little bit sooner, a little bit faster, and that's what it's needed, right? If price broke structure and returned back into structure, do you correct the pattern or this is just noise? That depends on the move back into the pattern. Is it, let's say this is a move and you're saying this breaks up. It all depends on how deep this falls back. If it falls right back to this, then I will adjust the line. I will adjust the trend line a little bit wider to the point, okay? But more importantly is how deep the move goes. If it breaks above like this and then come down, then I will adjust the line like this. But if this doesn't happen, if this kind of just pushes down like this and then start forming corrections, then to me this is a complete correction and this is just a correction on its own to push up. Thanks for the thorough explanation. Yeah, no problem. But Robert, that's fine disagreeing, but that's what you're saying about yourself, right? Not necessarily with everyone else. Yes, you feel real pain, but you can see that the market is so lucrative and make a mistake getting too excited. That is, no offense, your own emotion and psychological part that you need to work on, right? You can say it that way, which is no problem, right? But you need to work on that, right? You can't just be like, well, I lose some money in the market, but the market is lucrative. Well, you need to control your emotion, right? You need to control your psychological aspect, right? Yes, the market is trending, the market is moving every day, but are we going to capture every single run, every single move? Not likely, right? So you need to make peace with yourself. If you don't make peace with your mind and yourself, you understand that you're not here to capture every single move in the market. You can only capture some, right? So the moment you understand that, it's going to make you a lot easier to do it, all right? What currency pair is best for beginners? I suggest you trade some dollar pairs, which is what I always suggest. If you go to currency, focus on the main dollar pairs. You can focus on yen pairs, etc. I think that's bad. Try not to trade any exotic pairs, because exotic pairs usually have higher spread, things like that, and their move is not as their moves are a little bit more erratic. They still follow typical market structures, price action, etc. But I suggest focus on the dollar pairs a little bit better. Yeah, Robert. Losses create revenge trading. Losses create emotional trading. Losses create fear of missing out, right? Fear of losing. All these videos, again, it's talk about in my trading psychology videos. So if you have problems with fear of missing out, over leverage, revenge trading, watch these videos. That's going to help you to be more in sync with the market, okay? So let's move on to one last topic I want to talk about. Do I agree? Do you agree FX is more predictable and stable market compared to stocks? Yeah, most of my answers are very like broad, right? But for this question, I'm gonna say yes. I don't really like to trade stocks or day trade stocks because there's a lot of, I don't want to say manipulation, but there's a lot of gapping, there's a lot of news that can affect by it. I think for foreign exchange, I think currency market is a lot more stable, a lot more easier to forecast and make analysis on. I never really like to trade stocks or day trade stocks because of that reason. Okay, so that's a good question. Hi, Leon. I want to talk about last thing. I want to talk about multi-time frame analysis, guys. So thank you very much for bearing with me, but this is the most important aspect. So pay attention here, those of you who are online. I'm going to talk about multi-time frame analysis, structures within structure. This is the last topic I'm going to talk about. Okay, so look at this here, right here. I'm going to talk about this part. I'm going to use real examples as well after, so bear with me here. What time frame do you start with when you're analyzing Nasdaq? Start with the higher time frame daily and going down to 2 hour, 1 hour, etc. To touch on your entries, correction after breakout is my favorite. I've been able to decrease my stop loss significantly. Yes, but also understand, remember when I talk about these risks, when I talk about these entries in the in my video on 3 entries of impulsive phrase, remember that every single entries you do, there's different edge, right? When you enter a breakout entry, so when you enter a breakout entry like this, is low risk, low reward, okay? When you enter a reversal entry is high risk, high reward. And when you enter a correction after breakout is medium risk, medium reward. So just understand the risks, right? Of course, your stop loss is less, but sometimes the price will trick you back and tag you out, right? There's always a tendency of that, so don't forget about that. Do I have video on reversal and continuation pattern? Absolutely. This is probably one of the main one. Here, popular upload, how in-depth look at continuation and reversal correction. Impulse and correction. Watch all these popular ones. How do I identify valid high probability price action? I go to setup, nature of the market. All these are more watch ones. So obviously there's a reason why more people watch it. So it gives a little bit better idea of these. So watch these ones if you haven't. Okay. So last one I want to talk about is multi-time frame analysis. And let's talk about this really clearly. So really pay attention to this one. Okay. I'm going to talk about multi-time frame analysis. This is probably the most important part that you need to understand in order for all these things that I just talked about. This whole hour I've been talking about all this stuff. If you don't pay attention here. So what I mean by multi-time frame analysis, well, we talk about top-down approach, right? I said we start with daily higher time frame. We look at a potential time frame. So how does it tie in with structures and structures? Well, if we're just looking at this solely here, okay, we're just looking at this piece here, okay, forget about the other drawing. Straight here is when you see an impulsive move on the higher time frame, right? This is an impulsive move on the higher time frame. Naturally, there is a period of consolidation, period of a correction phase before impulse move. Simple enough, right? We know we have few swing highs and few swing lows that categorize as a structure. But when you understand that in a higher time frame correction, there's going to be multiple lower time frame corrections in there to complete a higher time frame correction. With me so far, guys? You understand that when you look at a pattern, when you look at a structure, when you look at a correction on a high, there's going to be multiple of impulses and corrections on the lower time frame to complete this overall structure. Okay, so this is why if you notice, sometimes I'll enter a trade when a higher time frame correction isn't finished. I'll enter something like this, or enter something like this, or enter something like this. This is exactly why, because I am forecasting that the potential, the higher time frame may be finished. I know that this impulse is likely to happen. I'm getting in on the first beginning of that impulsive phase. Okay, so understanding that higher time frame structure is going to have multiple of lower time frame impulse and corrections. Okay, so if you're not understanding this, just rewatch this video later on. It will all make sense to you. I'm going to go through a few examples here. Okay, so what we see here is we start with an impulse down, right? Higher time frame impulse. And then right away we have an ascending channel, a pullback here. But usually this ascending channel isn't enough to correct this higher time frame move. So you see ascending channel, we see a lower time frame impulse, correction, we impulse down. We impulse down to this bottom. And now we're not getting any continuation to push out now. What we're getting here is a descending channel, and then we know descending channel is a reversal order. we have a double bottom, descending channel, and then reversal impulse up, followed by a continuation, and we impulse up again. We impulse up to this double top here, and now price is forming a head and shoulder pattern. Reversal pattern, we drop down, followed by a pennant-like structure. Continuation, we push down to this double bottom or triple bottom again. And price made a reason double bottom. So a small lower time frame double bottom, higher time frame double bottom. Price then push up impulsively, correct, impulse, correct. And then strong impulse breaking above previous high, so breaking above this double top area, but there is no continuation to go higher. Instead, this is an impulse up, continuation, and then we see the higher time frame impulse. Okay, obviously every higher time frame has different correction. I'm just giving you a very broad understanding of looking at look deeply to see what the price is doing within this higher time frame correction. Okay, so I'm going to use several examples so that you guys can see what I mean here. What do I think about smart money concept? I'm not sure what that is. I think that is, correct if I'm wrong, I think that is entering trades with like less than 10 pips or something, and then you're trying to capture like a 10 to 15% run, and you know that taking these trades, you're likely to take a couple trades losses, but if you were to capture a good trade, that will give you a lot of profit. I think that's what it is. I'm not sure. Personally, I wouldn't recommend doing that if that's the case, because for beginner traders, you're not likely to be very sustainable and stay true to a trading plan. I'm sure people can trade that way and make profit and be consistent with it, but they're likely to be very good traders. They have very good self-control. They have good emotion and mindset when it comes to something like this. They know how to handle, a couple losses like that. They may take a few losses and they take one trade and make back all the losses, right? But can the beginner traders do that, right? Very grateful for the information. Is it recorded? My notification on your stream coming late. It is recorded. It is recorded. You can watch them on my TradingView. You can watch it on my TradingView stream. This is in the stream section. Or you can watch it on my YouTube. All my videos will be recorded and then it will be uploaded into YouTube after. So you can rewatch that as well. Okay, so I want to go over multi-time analysis when I talk about within a higher time frame structures, there's going to be multiples of corrections, right? So we know that this is an impulse, this is a larger higher time frame correction, and this is the next impulse. So really just looking this part here, we see a push up from the price, and then we have a sharp move down. So right away when we see a sharp move down, we know there can only be two things. It can either be forming a reversal correction and we just start going down, or we're going to form into a deeper kind of correction before the next up move. In this case, this is kind of what we see. We see a push down from the price and we begin correcting. See, even within this kind of a channel here, there is ascending channel here, ascending channel here. We push the price down and then you see impulse, correction, impulse, correction, impulse, right? So always understand in a larger, higher time frame correction, multi-time frame, is that within the lower time frame, you're going to see many, many corrections, many, many impulses to complete. So a few more examples before I give you what I mean, why I'm showing you all this. A large kind of a ascending channel or continuation correction. In this case, again, there's going to be many, many lower time corrections, right? Is an impulse up, correction, impulse. And then we have a reversal impulse, continuation correction, impulse. And then what ends up happening is this is an impulse and this becomes a larger, and then we have this bottom here, and then we have an impulse up, continued correction after breakout here, and then massive impulse to the upside. And now that we're heading to the top here, This is a higher time frame correction that we're looking. So this is an impulse down. This is a correction now. You can see that this bullish impulse up isn't complete with a continuation. Instead, it's a reversal impulse down, continuation correction, and we push the price lower. Okay, so why am I showing you all this is that the best way to capitalize on everything I just said today is when we forecast the next higher time frame impulse, right? We know this is an impulse. We know this is a correction. We're trying to forecast the next higher time frame impulse. Why we're trying to forecast a higher time frame impulse? Well, it's going to give you the most reward, right? It's going to give you the most profit if you're able to catch this profitable impulsive move. But entering the trade and a swing trade kind of style, like let's say if I put a breakout entry like this, kind of doesn't make sense, right? If you're going to put an entry order like this with like 900 pip stop loss for a 1-to-1, kind of doesn't make sense, right? The whole point of trying to catch the higher time frame impulse is when we enter them on the lower time frame. If you notice my multi-time frame videos, I talk about this many times. How to utilize multi-time frame analysis in trading. Make sure you watch this because that's going to tell you exactly what this is all about. Is when we forecast a higher time frame impulse, when we kind of looking at the higher time frame impulse, we're trying to get in on the lower time frame where our stop loss is smaller and our reward is bigger. The same move will happen, the same impulse will happen. Disregard if you enter here or you enter, but your reward is greatly different, right? So your job as a trader is to identify the higher time frame impulsive move and try to get in on the lower time frame to give you maximum reward if the trade plays out. Okay? So let's look at a few more examples here. Talk about dollar yen. So dollar yen, same idea here, right? We talk about on the higher time frame that this is that potential channel or flag. This is the impulsive move. We're forecasting this move to complete or at least to hit the top. If we look at, we already see this descending channel, right? So multi-time frame analysis, we first see the higher time frame channel or flag. That is a confluence for a positive bullish continuation. We go to the lower time frame. Lower time frame, what do we have here? We have a descending channel. We know descending channel is a reversal. And within the descending channel, there's a inverse head and shoulder pattern, right? So this is an impulse. This is a correction. We push up. So when you understand multi-time frame analysis, these things will just come to you very clearly, black and white pretty much, is that your confluence start from the higher time frame all the way down to the lower time frame. And lower time frame, you can slowly to see that, okay, inverse head and shoulder, impulse correction with impulse out of this descending channel, and then we have expanding structure. So all this move going to the upside is already giving you a clue because the higher time frame is already indicating that, right? So remember I said our goal is to forecast and analyze the higher time frame impulsive move that's going to happen and try to capture it by an entry on the lower time frame so it gives you maximum risk reward. Okay. Any question on what I just talked about on multi-time frame analysis, on identifying higher time frame and lower time frame and entering them on the lower time frame? Any questions on that, everyone? So to wrap it up, okay, to wrap it up everything I talked about today, guys, to wrap up everything I talked about. So price action analysis, right? We're looking at the movement of the price. We've specifically only focused on, I mentioned there can only be impulsive phrase and there can only be corrective phrase. There cannot be any other phrases. Okay, just disregard what you may have heard or learned from other people. But I'm sure this is a little bit more clear to you guys. We're only going to see impulsive move. We're only going to see corrective move. Okay, that is how the market moves. Okay, so when you truly understand that, it's going to analyze the market a lot easier. All right, and patterns and structures, while they're really the same thing, they're really the same thing to define what a correction is. We talk about corrections, right? We talk about corrections everywhere we see it. They can only be continuation or they can only be reversals, right? There cannot be any other type, right? You're either going to see a continuation or you're either going to see a reversal. There cannot be other, there's third one. That's how the price moves. So understanding that a correction can continue correct indefinitely. We don't know 100% when a correction will finish, but that's why we wait for confirmation, right? A correction just need to have at least 2 swing highs and 2 swing lows to categorize as a correction, but that doesn't mean that this move will happen. It doesn't mean the next bullish move will happen 100%. That's why we keep our risk at a minimum. We wait for the breakout. We wait for a confirmation correction to potential enter to confirm that this previous bullish flag or bullish price action is over and we're likely to see the next impulsive phrase. We talk about multi-time frame analysis. By the way, I'm going to inverse this chart because everything I just talked about all makes sense when it's inverse, right? This is a descending channel. This is a bearish kind of flag. This is an inverse head and shoulder. This is a reversal impulse. This is a W style pattern. This is a pennant structure to go. And this is that same multi-time frame analysis structure. Everything is just reversed, but it's the same idea here if you notice. Okay, so multi-time frame analysis, top-down approach, right? Start with a higher time frame, the next impulsive move in the market. You always understand when you're trying to forecast the next higher time frame impulse, your risk reward is greatly increased now because you're lower time frame. You have a smaller stop loss, but the move is the same. So you maximize it by having a less stop loss and maximize your reward. Okay, so end time frame impulse, the higher time frame run, when the higher time frame correction is finished, and then going down to the lower time frame to look for possible confirmation, look for entries, and look for end criteria. Ascending channel, how to enter. Watch my video, Hussein. Watch my video on price action analysis. There is a ascending channel, descending channel structure. Honestly, people, I really encourage you guys to really just have to spend time. You don't necessarily have to watch my video, but you should really spend time to analyze them, to watch other videos if you want, and really look at the market to see delays happen everywhere. You're gonna see them happen everywhere, anywhere, any market, any time frame. The moment you put in more time and effort, the easier this gets. Okay, I'm gonna say this out loud is because I spoke to too many people who they're just expecting it to click for them without putting any time and effort. I'm sorry, that's not going to work. You really need to put in the time. You really need to put in the hours. You need to put in your work to keep backtesting, keep watching videos, keep looking at the charts so it comes to you second nature. Okay, it's not going to come to you just by reading someone's courses or lessons or someone who claimed that buy my course or buy my lesson, you'll become a master. It's not going to be like that. I'm sorry to say. Okay, there's no easy way around this. You put in your time and effort, You're going to backtest the strategies. It's going to come to you second nature. The whole point of us backtesting and doing chart work so that the next time when I see them happening live in the market, I'm going to capitalize on it because I've done enough work. A lot of students who talk to me always say, "Oh, Jojo, I didn't catch this move. I was scared. I don't know what's going to happen. Blah 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 blah." Well, I always ask them, "Do you backtest? Do you do enough chart work?" Because if you didn't, then that's why you were scared. You're either fear of missing out, so you're entering blindly, or you're fear of losing. Your fear of losing, that's why you're not entering. But if you've done enough backtests, if you see these structures and price action play out over and over and over again, why will you be feared? Because you understand that now it's going to happen anytime you want now, right? If you backtest enough, if you backtest strategy enough, if you know that this impulse happened followed by a corrective structure always leads to the next impulse, then why will you be scared to enter if you see them play out over and over again? You shouldn't. So the moment you tell yourself, well, I'm fear right now, I wouldn't enter, then chances are you haven't done enough homework. You haven't done enough work on your own. That's why you're afraid to enter, or that's why you're afraid that the trade will not work out for you. But if you've done enough homework, then it will come to you very easily. Okay? Yeah, no problem, guys. Great, great. Thanks. It made perfect sense. Excellent coaching. Explanation is so much clearer than what I have heard before. Thank you. Thank you very much. Um, what else I'm reading here? Okay, so that's about it, guys. Any other question for me? I'm happy to answer if there's time, about 20 minutes or so. I can answer some questions if you like. Uh, I'm happy to answer some before I wrap all this up. Not really question. I just have a hard time identifying head and shoulders. Head and shoulders are. Let me. So you're gonna see head and shoulders a lot, but they're best to be most effective when they're at the top or the bottom, right? So we know head and shoulder is a reversal structure. This is cat yen, by the way. So at this time, at this current price action, there is a double top in the making. There is a ascending channel pushing the price up, and we broke this high. So already all these are bearish kind of price action, okay, so far. And you look at this overall, this top here. What is a head and shoulder? Well, I talk about head and shoulder is a left shoulder, head, right shoulder. Okay, so this is exactly what it's forming here. Okay, this is a head and shoulder. You have a left shoulder, head, right shoulder. What it's actually telling you is you have an impulse, you have a correction, you have another impulse, but instead of more continuation correction to go higher, or even a reversal correction, it just has a sharp reversal impulse followed by a continuation bearish correction to go down lower. Okay, so this is a typical head and shoulder pattern. Okay, so when you notice these head and shoulder pattern at the top of the current price action, right? This is a double top here on the higher time frame. This is a smaller lower time frame double top. We have ascending channel. So all these are bearish confluence of the market. Okay, the best example of a head and shoulder pattern, right? So a head and shoulder, and then once the right shoulder completes, we likely to see the impulsive move. Okay. Let's say you notice a continuation pattern on a lower time frame, for instance, like 15 minutes. When using a breakout strategy for entry, do you see or after the retest? I don't really enter retest. I understand what you mean, but usually if I'm going to enter, I just set an entry order, so it's gonna tag me in already. It's not gonna wait for like let's say you see a flag, you break out, right, and then you're waiting for a retest and come. No, I don't. I just enter the breakout. I just set an entry order like this and stop loss like that. So that's how I approach it that way. But there's nothing wrong with you approaching it with a retest, right? There's nothing wrong with that. As long as that is your plan or that fits your plan, that's fine, I think. So, do you see a reversal in Nasdaq 100 sell opportunity long term? Yeah, I'm gonna have to say I do see. I personally see most of the indices. I can still get very strong. Not necessarily Nasdaq. I think Nasdaq is about this top here. That's what I will look at. If this move up correctively like this to a double top here, and if there's a sharp impulse down followed by correction, then yeah, I will be looking for something like this. But right now there is nothing, so I'm not going to just enter anything here, right? So. But same idea like S&P 500 and Dow Jones. I'm kind of seeing this as the overall kind of ascending structure. This can correctively move up more and then sharp move down and then continuation. Okay, so. Am I going to watch Fed Chairman? No, I don't. Uh, this is uh, I don't really pay attention to news. I pay attention to major news, but I don't really pay attention to really other news. Again, this because based on experience, I don't really care about news because it creates volatility, but it doesn't create directions, right? I talk about this in the beginning. When the meeting comes out, when there's a FOMC meeting, this is the news event, right? So you can see there is like a couple hours of bullish move, and then people trying to buy here, thinking this is going to take off, and guess what happened? Impulse, reversal correction, impulse down. News do? Well, it does nothing. It pretty much pushes the price up, trapping a lot of impatient beginner traders thinking, well, this is supposed to go up now. This is going to take off now. So all they're doing is entering here only, and they will call this manipulation or scam, right? So think about what just happened here. What all it is the market pushes up, forming a top, completes this flag correction, so impulse correction, impulse. I asked a question on DXY. So the question is, if dollar index is buying, how does it move with dollar pair, and how should I enter pairs? We look at dollar index as kind of a guideline. It's not necessarily, but we look at the index to kind of look at what the dollars are doing. But it doesn't apply to every single dollar. That's based on like experience. It's more mimicking euro dollar. You look at euro dollar here. If I inverse this is looking like dollar index. Okay, so they're pretty much very close together. All we're really doing is kind of giving us an idea where the dollar might go, but it doesn't mean that every dollar pair needs to follow this in any way. Okay, so that's why we use. That's all it is that we look at dollar index to kind of give us an idea, but it doesn't apply necessarily to all the dollar, especially like let's say right now. I think there's mixed reaction of where the dollar is going. Some people, the dollar is going down now. Some of us are looking at dollar going up. So there's no right and wrong. It's just I think the price right now is not ready to give us some more confirmation. This can just be a corrective channel, right? We see impulse correction, impulse correction, impulse correction. There might be another impulse. Okay. You're welcome, guys. So any other questions related to price action, related to what we talk about today? I'm not going through the market today. I went through that yesterday. Sorry, you can watch that another time. But all I'm doing today is going through the the basic understanding of price action, right? We talk about these. So remember, any of these structures and patterns, they can all be inverse, right? We see bullish patterns, we can see bearish patterns. They're all the same if you notice. All I did is inverse the chart, right? This is one way of looking at it. This is the other way of looking at it. Every single pattern, every single structure is exactly the same. It's now that they're inverse, right? So inverse head and shoulder, bearish flag, right? Descending channel. Whereas this is a bullish flag, ascending channel, and regular head and shoulder. But that's all the same. We have to understand whether or not they're continuation or whether or not they are reversal. All right. After you analyze the price action, when do you actually place order? We kind of been talking about that. I talk about how to enter the trades, right? So look at this entry, look at this video if you're not sure. 3 entries in impulsive phrase. All I do is set entry orders, right? I always set entry orders. So let's say pound yen as example. I was looking at this, right? So all I do is set a stop entry order and I put the stop loss, and that's all I need to do. So let the price tag me in. So that's all you need to do. You don't need to take anything else. Set the entry order, let the trade run, and then set a potential target or take profit if that's the case. If the price moves in an impulse or a correction way, then what is noise of price action? I'm not sure what that means, my friend. Can you retype that? I'm not sure what you mean there. Yeah, kind of just answer that, David. I always set stop entry order for all my trades. I pretty much never take market order, rarely, pretty much none. I don't take any limit orders. I know what you mean by limit orders, but for way how I trade, for the way we are looking for impulses move, for a limit order is a pullback, right? When you push back and you enter here to sell, that's a limit order. We always enter stop entry order. So how about your exit strategy? Again, I made a video on this, how to take profit on your trade. You can watch this, but there's always going to be 2 areas to take profit. So for example, on pound yen, always the beginning of the correction, that's the first one, and then the previous low. So first target, second target, very simple. Okay, but in the video, it explains a lot more how to take profit. You can watch that. But most importantly is, like I said, beginning of the correction or the previous low. But this can be adjusted based on what the market is doing, right? So if we just continuously extend that, this is the same prime example on Binance Coin, right? Look how far Binance Coin pushed. Remember yesterday when I do the market update, right? Those who watch my market update, I mentioned this clearly is that when I saw this move down, and originally I had the take profit at $400, but when I saw this move up pretty impulsively, right? Impulse correction, move my. I understand that we're very likely to be in this next impulsive rundown of the market. So impulse, correction, impulse. So I want to give myself more room for potential profit. So I moved my profit up to the area. And I also update you guys yesterday on the daily update, market update, is that if this move down, push down is followed by some sort of bearish continuation, then I will exit the trade for about 3% profit. But if it does not, then I will hold the trade, which is kind of what we're seeing now, right? We can see this is a lower time frame continuation. So we had an impulse down, but we are followed by a reversal impulse, continuation correction, impulse up, continuation correction, impulse up. We're breaking all-time high now. So if this continues upward with more correction, expect it to continue to go higher. Okay. Jojo, thank you for your knowledge. No problem, Robert. Hey, I haven't seen you around much, Robert. I hope all is well. I remember I talked to you last year or maybe beginning of this year. I hope that's all good. What is your feeling about funded trading, FTO? Yeah, I briefly went over this. I don't mind. I don't have anything against prop firms or trading. The only thing I do want to point out is any prop firms, any of these funding trading firms or platforms, they usually have some sort of restrictions or requirement or some rules that you need to follow. So imagine FTMO, my understanding is no trades open weekend, right? Correct me if I'm wrong, if anybody used FTMO. They don't allow trades open on the weekend, which I always do, because if I need to capture a impulsive run of a higher time frame, my trade needs to open during the weekend, right? Yes, there is a risk. Of course, this is why they don't allow it, because they think there's a risk. But everything we do is double edged, right? So by not leaving your trade open on the weekend, you could potentially miss out on a higher time frame impulse. Whereas by closing your trade on the weekend, you can potentially less risk involved, right? So that's what I think about prop trading. Just find the ones that's reputable. Find the one that their rules and regulation is suitable to your strategy and your trading style. Because for me, is if you need to adjust your trading plan, your trading style a lot or a big portion of it, then I don't think that's good for you, because now you're trading the way that you're not used to or being success at. You're changing it because this firm tells you to do it. And then you end up not being the one that being consistent the way you were. Okay? So um normally my charts are set on daily time frame. I find it hard to recognize the pattern. Do you think it's better to put chart on lower time frame like 1 hour or 4 hour? What I do, David, is what I do is I have split screens like this, if you like that. So I have the bottom screen. I have the bottom screen as a higher time frame, and then I have the top screen as a lower time frame. So what I do when I mix it is I just click tab. I click tab. You notice I click tab on my keyboard. It will jump from one screen to the other screen. Okay. So pretty much I always have a screen for the higher time frame and then a screen for lower time frame. See if that helps you a little bit better. Okay. Lots of rules. Yeah, exactly, Robert. So your strategy should be good for options too. Pretty much any market, because this is why it's better than. This is why I want to point out is some people who trade other strategy like, okay, well, this only works for forex. This doesn't work for. No, if you really understand price action, if we really understand impulse, correction, impulse, if we really understand continuation correction and reversal correction, if we understand multi-time frame analysis, any market, any time frame, any instrument, it's all going to be this way. Find the one that doesn't work that way, right? I can't. Find a market that doesn't run this way. I cannot. Okay, every single market. Understand that the moment you've done enough backtesting to prove to your brain that that is what's going on, trading will be a lot easier and simpler. Okay. Okay, so that's about it. That's about it, I think. Any other question, guys? I think that's it. Can you elaborate on forex currency correlation? Does it work? Um, I don't think. I don't want to say it doesn't work. What I'm trying to say is, um, you shouldn't. Like what you're saying is, if Aussie pairs are going down, then all Aussie pair are going down. Not necessarily, right? It's the same as if the dollar pair is going up, does that mean all the dollar, right? So, I try not to think too much. You can pay attention to it. Let's say if you're going to enter, let's say Euro Kiwi, you're going to enter a Euro Kiwi position, but you can look at other positions, you can positions, but really you should only focus on the chart itself that is on there, right? You don't need to care too much about correlations, because at the end of the day, this action is Euro Kiwi, right? Based on Euro Kiwi only. Kiwi pair may or may not affect it, Euro pairs may not be affected, but just stick to the actual chart of that pair. It'll be a lot better, a lot simpler, I mean. So. Do you save this video so I can watch it over again? Of course, you can watch it on TradingView. So once this stream is over, you can go on my profile, you go stream. It should be somewhere here once it. Or probably the best is to watch it on YouTube, because on my YouTube, I have a lot more videos that's all categorized. This one will be in this workshop playlist, okay? But there's a lot more playlists you can watch on here that you can learn, okay? So you can browse through a lot of my content. I've been doing these since last year in July, I think. So, all right. Great lesson. Thank you very much. Appreciate it. Anything else you guys? What is your view on copy trading and robot trading? Do you mean copy trading like Signal, or do you mean something else, David? I know what robot trading is, but do you mean copy trading like Signals or something else? Do I do market analysis on NASDAQ any specific day? Well, I usually do 3 streams a week. I do 3 streams a week. I do a weekly trading outlook for the week ahead, and I usually do 2 daily market update, usually in New York session like today. Because of this week with the long weekend, I only did 1 weekly outlook and 1 daily market update, and I used today to do this workshop stream. But usually I will have 2. Usually I will do 2 daily market. So all 3 streams, I will talk about the currency market, the commodities, crypto, and indices. I do all of them in the streams. Okay. God bless you, Jojo. Because of your strategy, I'm able to trade better, and my account looks better now. Okay, good. Happy to hear that. That's exactly right. I made a video about motivation. I made a video about motivation here. The whole point of me doing all this also is to give back. I want to have more motivation in life. Not thinking about myself, because I have family now, I have a daughter. Thinking more about what I can do to everyone, and of course, it benefits me. Doing all this, everyone, just so you guys understand, it also benefits me, right? In a great way. It makes me a better trader. It makes me a better mindseted person, and it all helps me to be better. So it's not just me giving to you guys. I also receive, right? I also feel like I got a lot back in turn as well. So. Oh yeah, I understand, David. Some brokers have traders who they can connect to copy their trades. They link your account to other traders. If they buy, you can automatically buy, etc. Um, I mean, it's kind of like saying signals, right? Because you either give the link to people, or you give you give your account access to someone else. So when they trade, your account is also copied, right? It's kind of like signals. I just don't. Because I don't do that. I trade myself, right? I make my own decision on myself. This is why we do our analysis, backtesting, forecasting. We work on all the aspects. Of course, there's people who do that, and I don't want to say they're wrong or anything like that. What I want to say is many students that I spoke to who follow coaching, or any student sorry, a lot of people I spoke to, they told me they either follow some signals or they follow someone, and it doesn't end up well. And I always ask them why it doesn't end up well. They're like, well, the signal doesn't work. Their buy and sell is bad. Like they sometimes will say buy here, and then later on say, oh, we exit this trade earlier, and then they didn't post it on their Telegram or something. So they're just kind of in the trade blind. They don't know when they enter when they close the trade, etc. That's to do with signals, but with copy trading, same thing, right? Like, is this person consistent, sustainable with their account? Or is this person only trading a small account and just want you to give them access to your account so they can make money for you and then they can take a cut from you? Right? Are they actually trading a sizable account to be able to do that? We don't know, right? We don't know. So all I'm trying to say, my approach, my vision in trading is always to put in our own time and effort, right? Put in our own judgment, our own decision. We work on our aspect of trading, emotion, mindset, trading psychology, strategy, etc. We work on that on our own, right? That's what I emphasize because not everyone will be there forever. The person you follow signal today may not be there tomorrow. The person that help you to do copy trading may not be there tomorrow, or they start charging you a ridiculous amount of price. You're still going to be paid. If you move on, then did you learn anything from this person, right? Did you learn anything from this person? If not, then it's a waste of time because now you're back to square one. You're not really advancing trading, right? Every year, every month, every quarter, we want to keep advancing our stuff in trading because there's so much to learn, right? There's so much to learn that in trading that you can keep learning. There's never ending to anything. Someone thinks they know everything is the moment they're going to fail, right? This is my 8th year in trading, my 8th. I started in 2013 or 2012, I can't remember, 2013 maybe. This is my 8th year in trading. I'm still learning things. I'm still adapting to things. I'm still humble about everything because that's what you need to do in order to be successful in any profession, any business, right? Any job, right? A doctor, a physician will continue to learn even though he's been 20 years in the industry. A lawyer, after being a lawyer for 15, 20 years, he's still learning more new laws or new implementation that the government creates. So everybody is adapting to what the life and society is doing, right? Same with trading. We need to continue to learn and grow. The moment you become sloppy, the moment you become thinking you know it all, is the moment you're going to fail. Okay, so do I have a strategy with indicators? No, I'm sorry, I don't use indicators, so I don't have any strategy with indicators. Okay, so all right, I'm going to wrap it up now, unless there's last minute questions, but I think this is it. We've been talking for 2 hours now. I think this is a very good session. I might even do more of these. I might even do more of these in the future. Um, if you guys like these kind of workshop, if you guys like these Q&As, if you guys like these type of format, I can certainly do more of these workshop. I can even do workshop related to risk management, related to trading psychology. I think those are really important aspect as well. Again, I have many videos on those, so you can watch them on YouTube. But I think these workshops are great. I like the engagement. I like the interaction. I like the questioning as well. So I will look to do more of these in the future, and I hope that you guys like these as well. You can give me some feedback. You can give me some feedback on YouTube or TradingView or message me on Telegram. So always a student. Thank you. Any reason you won't trade option? I think options a little bit. I could trade option as I want, but here's the thing. I have enough risk trading Forex and trading crypto already. I really don't need to add more risk to what I'm doing. Like I would buy stocks, like I would buy equity stocks, hold it for long term, but trade options. That's really it. So yes, really enjoy this style of trading. Good. Please do more of these sessions. Very helpful. Thank you. Please continue the workshop. This to me was $1 million course. Good workshop. Okay, happy to hear that. Good. I'm glad I helped most of you guys. I'm glad these kind of things help. Uh, do I prefer Forex or crypto? I prefer Forex because I started with Forex. Crypto is the way to go now, right? I mean the future currency, so to speak. I did start with Forex, but I also trade currency. I mean, I also trade crypto. Right? I would trade crypto. I'd also have wallet to hold crypto. So the wallet to hold crypto is obviously a long-term kind of investment holding. Trading is trading, right? Get in, get out kind of things. So I never get tired watching you. Appreciate that. Thank you very much. Thank you very much. Appreciate that. Yeah, I think you prefer Forex or crypto or stock, Miss Soria. I prefer Forex and then crypto and then stock in that order. So, yeah, crypto use the same price action analysis, impulse correction. I use exactly the same, no difference, right? All the crypto pairs, it's the same, right? We've been looking at them exactly the same. Um, it all fits the same understanding of impulse and correction, right? Dot USD, impulse correction, impulse, Litecoin, impulse correction, impulse correction, impulse correction, impulse, right? Every single thing, it's the same. There's no difference in that. And the key is, like I always say, is when you've done enough backtesting, when you see enough chart work, when you see them play out, then you're going to see them more clearly now, right? So this is what I'm waiting for. Wait for another correction. After a large correction finish, we see a large impulse, then naturally another correction is going to happen, and we're going to see the next impulse. Major Pip. I thought you used Major Pip as your username, or maybe you have different YouTube username. Do I have any PDF to recommend? Do you have that I sell? I do. I do have ebook. I do coaching and I do mentoring and stuff. Named Forex King. You can join my Telegram first. Me on my Telegram. I do all my join my Telegram first. You can message me here. You can find out more about my information in this link. Okay, if you click this link, there's more information here on the ebook and things like that if you're interested. Okay. Um, what is the main force behind the currencies that make these patterns? If it's not the news, what is it? It's just the market. It's just the price action itself. There's really no, it doesn't have to be a news, right? I think a lot of us always think that it has to be news for an impulsive move to happen. It doesn't. It doesn't have to be a news. You just have to understand that's how the market moves. The market, if it's not moving, then it's just going to be a straight line like this. Will you agree? It's going to be a straight line like this. Like for example, if there's no movement, like for Euro Swiss, I don't know if you guys understand during this time. This is the time when the currency is pegged. If you guys know what peg currency means, it means Euro and the Swiss are kind of just like, okay, we're just going to work together. So it's not moving much. And then the moment the Swiss decide to be like, screw you, Euro, I'm going to go on my own. And this is what happens, right? So, but if there's no, this caused by the news, yes, but other things are not caused by the news, right? So, send your Telegram, scroll down. Here, I'll show you. So I guess the big thing is we have to recognize a reversal. You have to recognize the continuation, right? You have to recognize continuation and reversal structure, which I have a video on here. If you're interested, click this one. In-depth look at continuation and reversal correction. That's going to give you pretty much everything I say regarding reversal and continuations. Where did you click for the link? What do you mean link? Oh, here, Trading View, link and info. You can click here, and then you're gonna see that in my Telegram. You'll see that on my Trading View page. You can click here as well for the link. Okay. Great. How do you count pips indices? I don't. Correction and chart pattern is that the same thing? Pretty much, if you can see it that way. Corrections, it's the same as people call patterns and structures, or it's the way how I call it is patterns and structure is correction. Okay, so you sometimes hear me say corrections, you sometimes see me hear lower time frame correction, you sometimes hear me structures. They're all the same. Okay, it's just different ways of saying it. But most important, like I said, impulse and correction, two different phrases, and within a correction. Okay. Uh, yeah, I didn't give it to you. Sorry. Oh, never mind. Your best time frame, not a specific time frame. I go by higher time frame and lower time frame. So I always start with higher time frame first, and then I go down to anything under or 30 minutes, 15 minutes is all lower time frame, and it's valid for entries. In these corrections, these minor structures, one can trade before the major structure continues. Sure. So if you look at this example here that I have multi-time frame analysis, if you want to enter and sell to the low, sure, that's fine. If you want to enter here, sell to the low. If you want to enter here, buy to the high, sure. But don't forget the overall higher time frame bias is a sell because the bearish move come down. This is just a larger continuation correction. The ultimate direction is still downside. It's just that within this larger correction, there's a lot of movement. And if these kind of entries fits your plan, short-term trade, and if you can tolerate the risk, then sure you can enter these, right? There's nothing wrong. But remember when I always talk about I want to make sure the higher time frame aligns with my lower time frame. So my higher time frame bias is a sell, and my lower time frame entry is also a sell. So usually I want to make sure they are the same when I'm looking for a potential entry. Does more money in the bank? Sure, you can see it that way, but you just have to understand more trades you take doesn't necessarily mean more profit. You have more profit than someone who takes 100 trades because in 100 trades, their trades are not likely to be as valid or high probability or as good as the ones that I'm taking. So taking less trades, more profit, right? Because a lot of times you're taking mediocre trades and that eats up your good trades profit. Would you recommend 5 minutes? I wouldn't recommend 5 minutes into scalping now. I don't think that's good for account, and especially for new traders, maybe too much emotion and uh, too much stress to be trading short of the time frame, being very erratically, right? But the higher the time frame goes, the more easier to foresee the overall directions. So top-down approach, yes, multi-time frame analysis, top-down approach. Start with higher time frame, go down to lower time frame, confirm your multi-time frame analysis, confirm structures within structures, and look for an entry on the lower time frame that's giving you the maximized risk reward. All right, everyone. So I am going to wrap it up now. So I very thank you for everyone who's been here today. Looks like a lot of good positive feedback from everyone. So I appreciate all that. And I will definitely do more of these in the future. I might have different topics as well. I have trading psychology, risk management. I think those can be workshop topic as well. If you have some topics you would like me to go over, you're welcome to write to me on TradingView, on YouTube, on Telegram. You can let me know, and then I will go from there. All right. What is my next session? Well, I'm gonna do today's Thursday already, so I'm gonna do a weekly trading outlook live stream that's going to be on Sunday night usually. So it's a weekly trade outlook. So I'll talk about all the trades in the week ahead. So that should be on Sunday, 21 o'clock GMT, around that time. 21 o'clock GMT when market opens on Sunday night. That will be my first kind of, that will be my next live stream. Okay? All right. So thank you very much, guys. I appreciate everyone. And be safe out there as usual. And happy to see all the new faces and happy to see some familiar faces. So see you all next time and be safe out there. And thank you very much. All right.